Fort McMurray is small in size, but it plays a vital economic role. Canada has the third largest oil reserves in the world after Venezuela and Saudi Arabia. And Fort McMurray is home to a large portion of the country's oil sands. Oil prices jumped on Monday as Canada's wildfires knocked out 1 million barrels in daily production. The lost capacity is equal to over a third of the country's daily production, and production is also down in Latin America, Asia and Nigeria. Barclays says that globally some 2.2 million barrels of daily output are currently offline. Well, to make sense of this all, we can speak to Edmund O'Sullivan about the global oil production fall and the impact on prices, who joins us live now from London. Welcome to the programme. How much of an impact is the fire likely to have?
Well, you take 1 million barrels a day of crude oil out of any market in these circumstances, it's going to have an impact double. One impact is taking excess supply, but the second one, of course, is going to stimulate speculation, so the trade is going to come in. And we're in an extremely unprecedentedly volatile oil market. The oil price in the last 18 months recorded the largest fall in history. Since the start of the year, it's gone up by 60%. So a huge amount of short-term volatility that's going to be intensified today and this week by what's happening in Canada.
And how long can we expect low prices? I mean, is it going to be weather dependent? And obviously the market's watching very closely what happens in Canada.
Well, I mean, what is a low price? A low price in January it's now 60% higher than it was. So even without this, the oil price has recovered. But I think the big picture view is that the balance of demand and supply in the market structurally is still it's going to keep the oil prices down. There are these short-term factors, but for the next 12 months, there's still surplus supply, which means people think that the oil price isn't going to go much above $60 a barrel at any point this year.
Well, what do oil-producing countries need to do to see a significant rise then?
Well, they just got to hope. But there's only one country in the world that really can make a difference, and that's Saudi Arabia. Saudi Arabia's just changed its oil minister. The new man's not it'll be a change of tone, but it won't be a change of policy. OPEC in June will be told, again, they'll have a conversation, but Saudi Arabia shows absolutely no desire to cut its oil production, is doing the opposite. It wants to at least maintain its market share, and it certainly does want to give ground to Iran and Russia. So all the other countries in the world can say what they like, but so long as Saudi Arabia continues to pursue its market share strategy, then there's really not much else anybody can do with it. They're going to have to ride with the oil price and hope that in due course, maybe in 5 years' time, the oil price may go back to where it was. But in the short term, $50, $60 a barrel is more or less the best you can hope for.
And with regards to Canada's output, Edmund O'Sullivan, it's been reduced by a fifth.
Yeah.
How is this going to affect the economy there?
Well, any country in Canada has a very prudent policy. It's put aside savings, so it should be able to deal with the short-term economic impact of this. This is not yet a serious structural issue for the Canadian economy. But of course, it's going to cost the government money, insurance companies, and the poor, unfortunate people who've lost their homes and property.
OK, Edmund O'Sullivan in London, thank you very much for joining us.